gains from just one solid pick per day. Let's welcome Melissa.
Testing, testing. Can you hear me?
I can hear you. Can the audience hear you?
Wonderful. Thanks so much for having me. I apologize for being late. I was on TV this morning and traffic in New York City is crazy and today. So I'm happy that I made it. For those of you that don't know what I do, I trade stocks and I also talk on television about the stock market, about the economy. So I'm a very busy person, but I enjoy trading. Specifically, I trade gaps, and that's what we're going to talk about today. If you have any questions as we're going along, you can plop it in the room and I will see. And again, we're going to talk about gaps today. Actually, we shorted Tesla. That was the trade of the day today, which I don't have in here, but if we have time, I can pull that up as well. Again, I appear on TV, I talk about the stock market, I talk about the economy, and I love doing both. Trading is fun, particularly shorting, which may seem unusual in this type of market, but again, we shorted Tesla today. Yesterday, we shorted BA. So even in a very bullish market that's making brand new all-time highs, we are shorting. If you have questions after today, you can email me at melissa@thestockswoosh.com. You can call me at 929-3200-GAP. And again, you can always follow me on YouTube. That's probably the best place to follow me, where I have lots of videos, my television hits, and then sometimes I post a live trading room as well. So it's summer. It's a great time actually to trade because we're having a lot of volatility. We're getting into, in about 2 weeks, the week after July 4th, it's going to be the beginning of earnings season. So we actually have about 6 weeks of earnings starting again the second week of July, where it's going to be extremely busy time to trade. And we also have volatility. If you've been following anything that's been happening with current events, we've had volatility with that as well. And I expect that will continue. And then obviously tariffs have been on tap for 2025. So there's lots of reasons that it's been some really good trading in 2025. And again, you can go long, you can short, you could do both. I prefer to short, and that's what we're going to talk about today. But specifically in any type of market, whether the market's strong or whether the market's weak, you should have a trading system that you can use and apply in any market. So as strange as it may sound, like I said, I'm looking to short weakness and make money to the downside, even in a bullish market, okay? And I will short stocks that are going up. I will short stocks that are down. I will short neutral. So again, I'm shorting the gap, which I'm going to talk about in a little bit. But again, right now, a lot of people that have been buying dips are making money if they're trading the QQQs or the SPY, because the market, again, is close to making new highs in the SPY and already did yesterday in the QQQs. But will the bullish market last? That's the question. I mean, that's the big question. There's a lot of different opinions on that as well. But what if we wouldn't, okay? What if something happens with the escalation with Iran? Something could change this market as strong as it is, and something can change the market very quickly overnight in a gap. And that's why it's important to have a strategy that you can use and apply and make money, again, in any market conditions, okay? So it is important to be aware of current events, things that are going on, things that are happening, because that's going to allow you then to take advantage of the opportunity of things that could happen where you obviously as one individual can profit, okay? So you do have to be aware of what's going on in the world. Now, I put the results in here. I don't have today's trade or yesterday's trade in here, but this is through 6/23 on Monday. Our year-to-date results in the live trading room, 586,522. So I risk an average of around $4,000 per trade per day trade. Now, when I'm saying day trades, I'm trading stocks on margin, okay? So I'm shorting the shares, getting in, get out. Now, I also do options, okay? I also do options, but I wanted to show you the stats, 63% win ratio year-to-date for the room. And the stats for the options newsletter, I'm risking more money in my options. I'm risking an average of around $8,000 per options trade, up over 2.4 million for the year, 69% win ratio. So I'm doing day trades and options, okay? And actually, I'm in a Tesla put. But again, one of the reasons I trade options is because I can capture an overnight move. Many people want to trade options because you don't need a margin account to trade options, or you could trade options in a retirement account. For me, the benefit really for options is to capture a larger move overnight, okay? So again, my system is based on gas, which we're going to talk about in a little bit, but you can day trade it or you could do options. And I just wanted to show you our stats for year to date. Again, we're almost halfway through the year. Monday is June 30th, so we're 6 months into the year, going strong. Very strong start to this year. Again, we had a lot of opportunities to short early on in the year when we had that big sell-off, which a lot of it was based on tariffs. Again, will we have some more volatility like that going into the first, second week of July? It's going to depend on whether or not Trump pauses the tariffs again, or again, if we have something that happens with the war overseas and earnings season begins. So if you're here and you're thinking about trading, or maybe you're doing it already, you can trade the stock market, which is open every day from 9:30 to 4. You can trade it an hour a day, half an hour a day. We did Tesla. We were in and out very quick this morning in several minutes. It was less than 10 minutes. I was in and out of the trade. So even though I could theoretically trade all day, I don't. Okay. Again, I'm doing TV. I'm here with you with a webinar. I have another thing later today. I'm a busy person. I don't want to sit and stare at a screen all day for 6.5 hours. So if you're someone that has a lot of things going on and you're busy, you may not want to do that either. So if you can find one good pick, one good trade a day where you can take the trade, be in and out in a few minutes, that's really all you need. Okay, that's really all you need. And it's so important to find the right pick and take it in the right direction. Okay. And again, any questions? I have the questions up. I think I can see the questions. So you need the right tools to be successful. Okay, you need the right tools to be successful, and you need a good strategy. Okay, that's how you're going to get good results. Again, you need more winners than losers, and you also need some big winners. Okay, because you need to cover some of the losers with some of the winners. So you need to have some big winners too. And I developed a system, which is a rating system. And that is how I make my pick. And that is what I teach in a class that I teach once a month. I go through and I check the boxes and I go through a 26-point checklist each and every morning. I say if it rates 20 points or more, then I'm taking it in the direction of the gap. And again, this is something that's teachable, something that you can learn. This isn't like theorizing or you have to read all kinds of books or whatever. You're not purchasing a program that's automatically doing it for you. You're using your brain and thinking it through and actually going through the process and doing it. Now, here was when we did Monday. This was HIMS. We shorted this Monday. So first of all, let's talk about what is a gap, okay? A stock gaps when the closing price of one day at 4 o'clock, the market always closes at 4, and opens the next day at 9:30 at a different price. So this is a gap. So this was again on Friday the 20th, HIMS closed up here, snug as a bug, around 64 and change. Gap down here the next morning around 48 something. Open, dropped, fell. I shorted this. In fact, where this went on the day, this came all the way down to like 43 or 42 something. I got out of that way before then, but again, this was a gap, okay? And it was a short. So my process is I'm trying to figure out if this gap, okay, this is before it even opens, I'm looking at it and I'm saying, well, is this going to rally? Do I want to go long this gap or do I want to short it? And I figured it out. I applied my system. I said, oh, this is going to sell off. It's going to continue in the direction of the gap. And so we shorted it. So the entry was 46.78. Exit for me was 44.75. Nice move. 2,500 shares in and out. Boom. Again, quick trade, easy trade, done. And I did not do an option. This, I don't even know if there is puts in this. I didn't even look it up or what the volume is. But again, you could do a put if it's available if you didn't want to do the shares. But I shorted shares in this on margin and it fell. I haven't looked this up to see what this is doing today, but this was a nice gap. Okay, that was a nice gap on Monday. So again, what is a gap? The basics. A gap is a difference between the close and the open. So again, the stock market, the U.S. stock market is closed on Saturdays and Sundays. So every night from the 4 o'clock close to the next day during the week, we have a gap. Stocks gap most every single day. Not every gap is a good gap or what I call a golden gap. I'm looking for the gaps that are predictable. And how do I do that? I use my rating system, okay? So this was BA, actually this is a BA we did 2 weeks ago. Stock close here, gap down, open, rallied, dropped. So this is a gap. Again, closed up here, this was the 11th, gap down on the 12th. Then it closed here green, closed up on the day on the 12th, Gap down again the next day, the 13th, open, dropped. Came down here almost to 195, okay? So again, this was 2 weeks ago. So you could have shorted BA here. You could have bought a put, got in and out. You could have bought a put here, got out here on the drop, okay? So again, this was a gap down. This was a gap down, fell. So that was a nice one there. Again, the HIMS, just showing you again, reviewing, what is a gap down? Closed here, gap down, dropped, okay? So again, how do you make money in the market? You've got to get the direction right. If you're going long this, you're going to lose, okay? You have to be short this to win. That's the only way. And again, I'm looking every single morning to try to find something that has high odds. High odds of working. If I look at it and I say this has high odds of working, then I feel like I want to take the risk. If it doesn't have high odds of working, I don't want to do the trade at all. So again, it's about high odds versus gambling. Because a lot of people, when they're trading, they are gambling in today's market. You're seeing that more and more here now as the market's getting frothy, where people are trying to short it even at the highs, and then it fakes like it's lower, and then it's rallying more. Again, where we go in the next week, we have July 4th next week, and then we have earnings season the following week. But there's still a lot of things going on in the world that's creating activity every single day. So you have to be able to look at something and say, is this trade worth doing? Or is it not worth doing? And again, I'm trying to put the odds in my favor, because if I feel like it's not worth doing, then I don't want to do it, okay? I don't want to risk my money. I mean, you may as well go on a vacation, do something else, okay? So again, I developed the system, the rating system, which is a very useful tool because I figure everything out before they open. So way before the stock market opens, way before 9:30, I am trying to figure out if I want to take the trade in the direction of the gap or not, okay? Or maybe I don't want to do anything. Maybe there's nothing to do that day. Maybe there's lots and lots of gaps, but nothing that's predictable. So it would be odd that something wouldn't gap. Like it'd be very, very rare for stock to close at 2201 and open the next day at 2201. While that could theoretically happen, most stocks and the market gap almost every single day. But it doesn't mean the gap's predictable, or what I mean by playable, okay? So one of the biggest trades we had in the last month, and again, like I said, we did Tesla this morning, was Tesla back on June 5th. I don't know if anybody remembers this day. It seems like it was a long time ago, but it really wasn't. It was only a couple weeks ago. Stock closed here, gap down, and absolutely tanked. So again, the night before Tesla was around 331 somewhere and change. Gap down the next morning around 320-ish, and by the low of the day here was around 273 and change. The stock fell on this particular day, on the 5th, like 60 some dollars. This was a fabulous, fabulous short. Now, we were already in puts in Tesla coming into the morning. We did more puts, and then we did a day trade here too. But this was the biggest short that we had in the last month, okay? So again, to get a bar that's $60 plus, it doesn't matter if you have 100 shares, 1,000 shares, you're gonna make a lot of money as far as risk to reward times the amount because of the move. So one of the reasons I like gaps, and particularly shorting, again, because you get bigger moves to the downside than you do to the upside. But one of the reasons I prefer to short as well is because you can get panic. Panic comes into a stock, comes into the market, whatever you're doing, and it just goes fast, big, and almost out of nowhere. And that is really what happened that particular day. Panic came in. Again, Trump and Musk were fighting, or whatever the case might be. This was, like I said, 3 weeks ago. It doesn't matter why. It gapped, okay, and it was a good gap. So again, it's what I call a golden gap. So we did the 6.5, we did the 300 puts that expired the 13th. Again, the stock low of the day was around 273. Just an absolutely ridiculous trade. Cost was 550, sold at 32, 482% return on investment. I did 17 contracts and made $45,050. I got in and out the same day. Again, I did this trade in the morning early, 10 minutes into the open, and this was before the news broke about them fighting. I just read the gap, okay? I read the gap. I had no idea they were going to be fighting that day. Now, what if you did 2 contracts? You could have made $5,300. You could have done 1. You could have risked $550 and made over $2,600. These are the types of trades that can just make your whole account when you get trades like this. Now, we don't get trades like this every day, But we do get trades like this on a month-over-month basis. And you got to be looking at the right stocks. You got to be looking at the right picks. And again, you got to be looking at the right things. Now, I want to show you the one we did before the move, though. So we did the 330 puts on Wednesday. Again, going back to the chart. So here was the 4th. So this gapped here. We bought the 330 puts here, dropped, fell, came down, broke the strike, fell off a cliff. So again, we were in this here, continued, got the drop. So that was a higher strike. We were in it before that on 6-4. Again, another short, another gap. Oh, here's the chart. Here's the chart. This was a little bit more expensive, though. This was a little bit more expensive. It was closer to the strike. The 300s I did, the stock was around 320 plus when we did that trade. So this was at the money. The other one was away from the money. That's why it was cheaper. But still it paid. Still it paid. So one contract was $12. 8 cost me $9,600, sold 358% return on investment. Again, this is taking it one day, getting out the next day. Again, one of the benefits I find with doing options is you can hold for overnights for larger moves. Many people don't want to do that. Again, you could have got out of this trade and made money the same day, but the bigger move was holding it for the follow through and the continuation. And one contract, you could have made $4,300, risking $1,200. Again, taking in the 4th, getting out the 5th. So if you were long, you lost in this trade, okay? And again, this is one of these things where you're trying to figure out the momentum, the direction, because it's not that complicated really when you think about it. If you want to make money trading, all you have to do is get in the right direction. Now with options, you do have to get the timing right. So you could say, well, I think this is going to drop. But if you do an options expiration, say for July 3rd, and the stock doesn't drop by that time, and if it drops, say, the following week, you're going to lose, okay? So you have to get the timing right for options too, plus the direction combined, which is where it comes in with the whole philosophy of what I'm saying about momentum. Momentum is so critical. So why do I like to short? Again, I like to short because of panic. You get bigger moves to the downside. Again, the market right now today is rallying. The SPY is trying to make brand new all-time highs. The banks are moving higher. JPM made new highs. But again, if something would happen and the market would start to sell off, it would happen like that. One sell-off day or one gap could wipe out all of today's rally, yesterday's, the last 2 weeks. And that is, again, the power of the gap and then the power really of selling pressure and panic. Now, again, when something falls, you have shorts. Okay, you had people shorting, like I was short Tesla, but you also had selling. You had selling, and you had big selling, institutional selling. I've said this before, and I keep saying this, drilling into people, because you have to follow institutional money. If you're following institutional money, you're going to have a lot less losses than you're going to have if you're not. Retail traders, why they sometimes can temporarily move a stock, will not take hold of a stock if institutional money wants to come in and dump it or buy it. Either way, whatever the case may be. So again, it's very interesting because we're in a time right now where we've never seen this many retail volume. So many people are trading. Again, you have futures trading overnight. Then you have the gap in the morning. And then you obviously have funds. So everyone has a different opinion, like I said, where the economy is going in the next 6 months, where the Fed is going to, whether the Fed's going to drop rates twice this year, once or not at all, whether we'll go into recession. You have lots of people looking at bigger picture things. But for me, when I make a decision about a trade, I'm looking at the overall picture. I'm looking at the technical analysis. I'm looking at the gap. Okay? Any questions here so far? How are we doing? Anthony, just let me know what time I have to talk to, because I know it was a little late. So anyways, how do I determine what the smart money is doing? Okay, I use my tools. It's my rating system, and it's based on, like I said, technical analysis and a gap. So what's my process? I get up in the morning, scan for gaps, find them, rate them, okay? Because you can't short every bearish gap. You can't go long every bullish gap. So I developed a method that the checklist tells me what to look for in the price of the stock. And yes, you have to use your brain. Your brain is your best asset. It's my best asset. You can use your brain to think about where this is going to happen. again, you're stacking up all the odds in the favor of the move or against the move. So, like, for example, if I rated something and it rated 15 points, I said, oh, I don't want to short this. This could rally, okay? It's not going to continue maybe in the direction of the gap if it gets a low rating. So again, I'm looking at something and using my brain to evaluate it, and I'm doing all this before the open. So I don't have to rush and trade on the fly and make a quick decision out of nowhere. I'm very thoughtful in what I'm doing in the morning ahead of time, okay? So again, I'm trading on the side of institutional money, looking for the momentum moves. I'm looking for big momentum and, again, big money. So this is how I do it. And it really takes the guesswork out of your trading. And also if you're trying to trade the news. I mean, the other day, actually a couple of days ago, I think it was Monday. Yeah, it was Monday. The market opened lower, dropped big, flipped, rallied. It was all over the place. So again, if you're trying to trade Trump's tweets or the news, or you could be going crazy. You really, really could. You could be going long and short the same stock the same day, up, down, losing, all over the place. You have to look at something and say, I think this is what this is going to do. You assess the risk, you rate the gap, you put the trade on, you give it a chance to work. And again, it either wins or loses. And again, for the day trades, I'm doing them quick. For the options, I'm doing the weekly trades where I'm letting the trades play out. But in this type of market, if you're trying to trade the news, you're all over the place. And I think it's been part of the frustration this year, because things could fake one way and then flip. You know what I'm saying? Now, this is another one here we've been watching, and we've done a bunch of day trades, shorts, and puts in Apple too. Now, I'm going to go back. I'm going to go all the way back here to May, like a month ago. Stock closed here, gap down, open, dropped, fell. Closed here, gap down, fell. Closed here, gap down, fell off a cliff. So we shorted, we got this move in Apple. So from the initial one over here, it was around 210. Okay, we're in the middle of, again, I'm going back, well, it's almost a month and a half. Going back to May 16th, within a week, the stock dropped 20 plus points. So again, we were able to capture this shorting, and you could have done puts. Okay? So there was multiple gaps. So again, I'm focusing on institutional money, but I really designed my system when I started to trade, and I did a short, and I made a lot of money really quick. And again, you know, I decided I wanted to become a specialist in one specific strategy. So I developed a system to not only find the gap, but to short. Okay, so reading is a skill. It's a skill that can be acquired through education. When you're reading a chart and you're trying to predict it, and you're trying to say, I think this is going to get a dump, it's going to drop, or this is going to rally. Okay, you're developing a system, a method to look at it by using the system so that you can take the trade before the big move happens. Again, while theoretically, you know, Tesla dropped 60 points in that day, you could have shorted it in the middle of the day and made money. Ideally, to be in the day before the drop, or even right out of the gate, 5-10 minutes into the open, you're going to get a much, much, much better entry than trying to chase something after the fact, okay? So I've just become an expert in reading price action, and all you need is live charts. You need live charts, you need live data, and I find a lot of people are jump up and down doing different things when they're trading, and they're looking for some quick thing that's going to make back all the money they ever lost from the market. It's not like that. It's really learning it, knowing it, understanding it, going back. You know, you evolve as a person when you get better over time as you're reading things. You know what I mean? And then you get better at predicting, you know, where something's going to go. And again, I'm not predicting the earnings like for a stock before they happen. Nike has earnings tonight. I don't know if I'm going to short it. I don't know if I'm going to go long it. I know it is earnings tonight. I know I'm going to watch it. Okay? Any questions? How's everyone doing? Anthony, I don't know if you can hear me. How long do I have to talk? I don't know if you're there. Any questions from anybody? I know I'm talking.
Hey, Melissa.
Yeah.
I was just going to say till 1:40. Is that okay?
Yeah, that's fine. That's great. Thank you.
Okay. Yeah, you're welcome.
Perfect.
And yeah, everyone, please take advantage because Melissa was just on Fox News and she's on there a lot and she's really great at what she does. So ask questions. She's an expert.
Thank
Thank
you.
you.
Thank you. Okay, so let's get back to talking about what I was saying about learning. First, you have to learn what to do. Don't risk your money willy-nilly in the market. Second, you should be following someone that knows what to do. Okay, you do and follow. Again, I showed you my stats at the beginning. Not every trade that I take wins. Some trades lose, but I have more winners and losers, and that's how you get ahead. The idea that you're going to take and find a system that has 100% winners just doesn't exist. Okay, and again, we're going with the ebbs and flows of the market. There are definitely times where it's more advantageous to trade than others. So again, going into earnings season, the second weekend of July will be a more advantageous time to trade. Why? There's going to be a lot of moves, there's going to be a lot of earnings, and then we're also going to really see how tough this market is, how strong this market is, if it can withstand some stocks reporting earnings not so good. But the last earnings we had, because of the tariff situation, a lot of places didn't want to even give future forecasts because of tariffs. Guess what? None of that's been resolved. And now we're going into the next earnings season. So it's kind of interesting because, again, you think you know something's going to happen and then all of a sudden it changes on a dime. One of the reasons that I like to do the fast trades is because it doesn't matter if things change in a dime. You could be in, make money in 5 minutes, get out. Like, again, I shorted Tesla today. I got in, got out. You don't have to worry about it then. Again, you're like, I'm done. It doesn't matter if there's a tweet. I'm already made my money for the day. So again, that's one of the reasons why I like the morning, why I like the fast trades. And then number 3, become an expert in one thing, very important, implement a winning mindset, trade daily with conviction and confidence, and you'll be set. You'll be set because, the confidence that you need sometimes to trade, to put on the risk, to make the real money that you want to make, if you want to do this, if this is something that you want to be serious about and do for a living, you have to have a high level of confidence to do it and to get good. Because I think a lot of people, again, when they're trading, they are back and forth all the time, and it makes them, puts them in this mindset where they're in this fearful mindset, which really then it's tough for people to take a lot of risk. So for me, again, I've been doing this for a long, long time, but I've only been doing gaps. I've been trading for 17 years, but I've only ever been doing gaps the whole time. So I think trading education is important, and I think a lot of times people take one class, expect to know everything, or they learn something that doesn't work, and then they get down on trading education. You've got to learn what to do to become successful. It's like if someone said you were going to become a dentist and you never went to dental school. That's unrealistic. You have to learn. Same thing with any higher education you need in order to have a job where you're functional and you're successful in that particular career. And again, many people have a focus. With trading, a lot of times people want to do all kinds of things. It's really not that different than being a doctor or a surgeon. The good people are the people that have a focus. Okay, you wouldn't go to an obstetrician, for a heart transplant. Okay, so again, this idea of getting really good at one strategy, becoming a focus and an expert, if you take away nothing else from today, that piece of nugget you should take away from today. Because a lot of times people want to learn a plethora of information and they never really get good at anything, and then they wonder why they can't make a lot of money trading. Again, you have to get good at something. Okay, so number 1, you need a winning strategy. For me, mine is gaps. So again, the basics of what is a gap. A stock gaps when the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. So how am I doing this? I'm determining who is in control. If the bears are in control, you're going to make money shorting. If the bulls are in control, you got to be long. You got to be long. It's the only way you're going to make money. So again, you're determining who's in control. Like I said, we did this Apple. If you were long Apple here this week that we were shorting it, you lost. Okay, you lost. It dropped down 20 points. So you would have had to be short or done puts. Okay, again, sounds simplistic, but you got to get the direction right. So I developed a method where I rate the gap using a 26-point rating system of the daily chart. I do it everything in the pre-market. I'm set before the open. And if it rates 20 points or more, then I take the trade in the direction of the gap. Again, you could do it as a day trade or an option. I just, I like holding options longer, and I think they're easier to manage. And I like to do my day trades because I'm in and out quickly. But overall, this checklist really helps guide me every day. It helps keep me steady. It helps keep me on track. It helps keep me focused so I could do one trade in and out, quick and done, make the money and walk away. Again, sitting all day trading for 6.5 hours, you're going to tend to give money back. You can't just keep being perfect for 6.5 hours a day. Unless the market's power trending or the stock's power trending in one direction all day, which is very, very rare, and the market hasn't done it actually since the day that we did the pause day. That was the last day that the market did a power trend day. So it's rare that stocks would go in power trends for all day or the market. But otherwise, you can't trade something all day, even in the same direction. Now, this day here that we're talking about was a power trend day to the downside for Tesla. Did I know that right out of the gate? No, I didn't know that. But at some point, once it started to go really big, I did see where it was going. And again, we were in the 300s when it opened here above 320 before the open. So I figured a week to get to 300. I had no idea at 940 that stock was going to go, 27 points through in the money the day that I did that at 940. I didn't know that. But when you take a trade, the momentum comes in, and you again panic. Selling, it just pushes it. And when you're watching it, again, it's just like, oh my God, this is so easy to make money now. We're in it. It's just going really big. It's really easy to make a lot of money trading on the side of institutional money. It's really hard if you're against it. Like if you've ever been against it or in a trade where you're fighting it, like, you know what I mean? Like where you're down, you feel like you're fighting it, or if you're doubling down, if you tried to add to a losing trade where you feel like it's going to go, you're fighting it. That's just a bad place to be in. It's just a bad place to be in, and you're going to end up losing more. You know what I mean? Whereas if you're in the right direction with something and institutional money is moving it, it's so easy. You don't even have to do anything. You just watch the money just go, and watch the options change go if you're in an option. So we were in this quite early, though, I will say. 6-2. 10:14 in the morning, we did the 335 puts. It expired 6-6. This cost $7. It was the biggest trade I've had in the last month. This was that day of the move. Again, I did not know this when I did this trade on 6-2, but I'm going to go back to the chart and tell you what happened. These weren't dirt cheap, but they were not that bad for Tesla at this price point. Made 757% return on investment because I was in this trade before that fifth sell-off, and I was in it early. I made $74,200. If you did two, you could have made over 10 grand. Now, where was this trade and how did it transpire that I was in that day? Because I did it here. So the stock closed here, gap down. We did the trade here. This was 6-2. So again, we did it early in the morning, 10:14. We did the 335s. Okay, this was this day. I'm going all the way back. And I just did it for the week. So I did it for the 6th. So the 6th was Friday. The 5th was Thursday when it had this crazy sell-off. Anyways, the trade was up, and then it bounced really quick, so I didn't get out. It was up. Looking back, if I had gotten out of the perfect point here at the low of the day, I don't even know what I would have been up, but I wouldn't have been up 100%, and I don't think I would have got out because of the fact that I had a week left, and I liked the gap. But anyways, I didn't even have time to get out. So it was up, then it was down, then it gapped up the next day, totally 100% went against me. The trade was green, the bar was green, the trade was down, because remember, I'm short here now, I was in a put. We're on to 6-3, 6-2, 6-3. Trade was down, dropped, fell, stayed with it. Again, I had to the 6, came, dropped, started to go, gapped down the next day, fell off a cliff. So again, people always say, well, how do you get these big trades? Because I'm already in it. I'm already in it when it happens, okay? And I didn't kill it. So sometimes a trade goes right away. Boom. Like the day that we did these trades, they went right away. But sometimes a trade can take a little bit. And so again, that's why it's important not to oversize yourself. If you oversize yourself or risk too much, you'll tend to kill a trade if it goes against you. Okay? Any questions about that? And again, this is where understanding what to do and having the right knowledge and information keeps you on track. So again, if you learn how to read the footprints of big position players before the momentum comes in, you can make money. Knowing how to read what institutional money looks like will help you become successful as a trader. And the benefit is that you can win big trading on this side of power. Very important because, again, you want to do well. You're taking the time, you're taking the money, you're taking the energy to do this. You want to do well. And again, so 1, learning a winning strategy. 2, find a supportive mentor. I'm there for people. I call the trades in the morning, like I called Tesla today. I say where to get in, where to get out. I call the trades. I rate the gaps. I do the picks. I run the room. I teach the classes. I develop the system. I do it all. Having a person and a mentor to go to ask questions really helps you. If you don't have that, you're kind of hanging out in no man's land. And that's very difficult for people. People want to know why. They want to understand why. And again, I explain why on the chart. In the daily chart, I teach the checkpoints. I teach everything in the class, the entries and the exits, and I explain why this is this. You know what I mean? I say, well, this is going to fall because of this. And again, you do it yourself once you learn it. But the rating system helps me determine who's in control. It helps me determine who's in control. And remember, a big flow of money going in a certain direction is what moves the market, stocks, creates momentum, and sets the trend in charts. When you're looking for institutional money, you're really reading the side of power in a stock. You want to be on the side of the power in order for you to make money trading. Institutional money is in charge in the market and stocks at all times. At all times. And again, even if you think it's not, it is. So it's about focusing on quality. Maybe there's a day you don't do any trades, but that's better than losing. Again, this is one of the reasons when I take a good trade, I stop. I don't keep going after it, because again, you're just going to chop yourself up. Now, we were talking about that day. Here was the 6-5 day, the Tesla day. Now, I did a day trade here. So we did the puts, but I also did a day trade. Again, this is a day trade on margin. Stock close here, gap down. We shorted it. 322.75, got out at 317.30. This went to 273 and like 273.12, I think, or something, which is crazy looking back. I had 1,800 shares of this. Again, I wrote out the puts, but I made $9,800 on the day trade here. Now, you have to have a margin account to do this. Again, I got in and out of the morning quick. I was done, but it's kind of crazy looking back. Again, did I know that would go to 273? No, I didn't. But again, it's a lot easier, I think, as the morning goes on, as the day goes on, to manage puts or calls, and it just options, because you'll have time, again, and that was a Thursday. But really nice call here, really big day trade in that one particular day. Any questions here? How are we doing? If not, I'm going to keep going here. I have a few more minutes. So people get into my room and they expect to win. They're focused, they're ready to go. We trade quick, we trade early. Having a winning mindset helps you. And again, I say chunk it out, because sometimes I look back and I say, well, I could have held this and I could have held that. I got out of the Tesla and it dropped more after I got out of it today. But I made money. Like, my day was done. I made the money. I did what I'm supposed to do. It's done. Again, trying to always be a pig, trying to get more and more and more, being greedy, can come back to bite you, particularly in this market, actually. So number 3, and very last thing, is to become an expert and have a focus. I think this is extremely important for everybody that trades. For me, it's about getting good, okay, working smarter, not harder. So how can I make the most money in the shortest period of time? And again, for me, that involves, number 1, focusing on shorting, sell-offs, the beginning part of the day, the morning, okay? And for whatever reason, a lot of retail traders prefer to go long. So there's lots of people out there that have no idea how to short, can't short, don't have their account set up to short, don't even know what to short, and will miss out when the sell-off happens, miss out when panic moves come in, don't know what to do with the Tesla, and or that's just an example. It could be other stocks that fall. You've got to be able to do both. Again, I can go long too, but I just prefer to short. But being consistent helps you in any market. You've got to think about it intellectually. If you're someone that has been all over the place, you need to get more consistent. You need to follow one strategy. You need to do one thing and get good at it. So if you decide you want to come and learn from me, and if you decide you want to take my class, what will you learn in the system? You will learn how to make money in the market by trading and rating gaps. You will learn the 26-point rating system. You will learn the entries. You will learn the exits. You trade them in the morning, early when they set up and trigger, and you will learn a structure. Again, my trading room, the way I call trades, is a structure. Having a structure will help you become more profitable. You must have the early morning time of the day to be able to trade, to do it between 9:30 and 10. And again, we're looking for precise entries with follow through and typically a good risk reward. So I'm looking for 1-to-1. If I get more than 1-to-1, great. But I'm really looking for 1-to-1 when I'm trading. But if you're someone that's been doing this for a very long time, trust me when I say you can do it. You may feel like it's impossible, but it's really not impossible. You can do it. You just have to learn, or maybe you're not with a good mentor. Maybe you don't have a good system. There's so many things out there. You have to pick and choose. And again, it's what works for you and if it's something that makes sense for you. So again, I've been trading now for quite some time. Any questions here? And I'll let everybody know when the class is. Again, I said this before, understanding why really definitely helps you, because a lot of people are very curious. They want to know why. Why is this going to fall? How did you know Tesla would drop? Things like that. As human beings, we are curious. We want to know why. So learning helps you. It really, really does. So empower yourself today to trade. You'll learn a complete system. If you want to learn and take my class, the class is once a month. It's a full course on how to strategically find, pick, and play stocks at our professional bearish gaps. Class is online. Class is $69.99, July 12th and 13th, 9 to 5. I can't even believe it, but next week is July 4th. So the class is in 2.5 weeks. If you want to sign up, you can start trading with us now. I'm doing a summer special, really for people that are focused on doing options. I took that picture. Can you believe that's a picture of a heron in Central Park? If you sign up by Friday, you will get the Gap Options course free, which is July 17th. If you sign up for the Golden Gap course, which is the 12th and 13th, and you will get the Trading Room and Options newsletter free through the end of this year. Any questions from anyone about anything? I can quick pull up the market here and just see where we are right now. We're rallying. Any questions? Let's look at Tesla. Tesla looks good. Look at this. This looks good, actually. Any questions from anyone? Thanks so much for waiting and letting me talk. I'm sorry I'm late. Lots going on, lots to do. If you want to email me, you can email me here if you're interested in the class or the special or have any questions. Let's see it. And this is an exciting time to trade. Very, very exciting time to trade. Lots going on, and I think people got to be careful. And it's one of these things where, again, you got to take profits. Don't forget to take profits. Things can turn and change on a dime, and taking profits is part of trading too. It's not just getting in, and it's also getting out. How's anyone doing? Any more questions? Good focus with CJ. I don't know if Anthony's there. I'll just show you really quick the trade we did today until Anthony pops on.
I'm here, but I want to see this trade as well. So go ahead.
We shorted this here, and we got out here. So you see right in, this is a 1 minute chart. We got this in here. Got all the way out of this. Down in here was a beautiful move. Now, I actually got out of this before this bar, but I could have made more. So this came all the way down 324.83. I got a nice drop in here. I got out of this guy, but this came down here. I didn't get out of the low of this bar, but I got this. Like, I was literally done like in 3 minutes today. And now looking back, again, I'm in puts. I'm in Tesla puts right now. Actually, they look good. They look good, so we'll see.
Thank you, Melissa. Thanks for sharing all that. Really appreciate it.
Thanks for having me.
Thanks.